parallel channels we had, we jumped into the higher part, and look at us, guys. Look at where we are right now, above the middle of the second parallel channel, and the top of it at the current moment on the daily is at 27,953. So we can expect, if Bitcoin came up to this level first, some sort of a reaction at this level before, as we said, we go to 28,100. So that would be another level to look for based on this parallel channel, the upper line of this parallel channel. And yes, guys, we got reaction exactly at the level we spoke about 1 day ago. Welcome back to Coffee Infused Crypto. I'm sorry in advance for my voice. I had been a little bit sick, but hey, the markets doesn't wait for anyone. So today we're gonna make this a little bit fast, but it's a very important update, which you really don't need to miss. It's the end of the week. So yeah, if you find this content helpful, please do consider subscribing and spreading the good news. Anyways, let's deep dive into the charts. Yeah, as we spoke about this double parallel ascending parallel channels, and we anticipated a reaction here. Well, we got a reaction here, like straight to the dollar. Yeah, a reaction here and a pullback, a slight pullback. So we have today good news and bad news. It's a very important day. It's the end of the week, that's why. So the pullback here, anticipation to be supported at the middle of this parallel channel at around, let me give you an exact number here. So that will be 26,400, 26,500 area. So I want a reaction here to keep this bullish momentum, even if let's say, God forbids, we crossed this line and went all the way down and anywhere around this area at the lower bottom of this we would still be in an uptrend, because this low would be higher than this low. So in theory we would have created a high, a higher high, higher low, and then just going up in a bullish momentum. So only until we break this line to the downside around this area, we would change the structure of the market. So far we're good on this chart, but to jump into this one, which we discussed as well earlier, I've added a stochastic RSI, and we're gonna discuss. We have two scenarios now. We're on the 4-hourly, so I'm gonna explain why I added this yellow line here. The markets will constantly move, so you constantly need to adapt your charts based on what structures are being formed or what you can witness changing in the structure. And ever since I did this, I've had like 3-4 reactions on this chart, which is a very it's solidifying that this line is of importance in the chart here. I'm talking about this area. So ever since we said that this triangle, we broke it out, we got all the way up to the 1 Fibonacci level. So that was the one we broke. If you go back to the daily, on the daily we noticed that ever since we broke out of this chart, okay, we started creating this, we had a reaction here, 2, 3, 4, 5, 6, 7, 8, 9, and then this line, which acted as a resistance all the way up, is acting as a support. We came back, we retested here, and it supported us, and now it is supported us and going up from this area. So this yellow line down here, which is the triangle, if you know, the big triangle, so it was as acting as a support. So we supported us here, and then we went back to it around here, retested it, and this is the trend legacy line from all-time high. So this line combined with this line, that forms a megaphone pattern or a Bollinger Band, and we discussed those structures. I'm gonna put the link up here in the top corner so you can check out. By the way, those structures are universal. You can always go back to them and check them out. They're not time sensitive. So this pattern where we bounce in between this pattern, and then if we broke, now we broke to the upside, so breaking to the upside will have this whole move from here to here, and that would be the target to the upside. But anyways, too early for that. I'm gonna analyze the short-term targets and to the upside and to the downside. Okay, so if you go to the weekly, and just to understand, on the weekly, we had the 200-day week moving average, and that was around this area. You remember, $25,300. So that is one target to the downside that we need to stay above and close the week above. Today is very important because today is the end of the week. So this candle will close today, right? So we want to close above the 200 weekly, and we're gonna see what is that aligning by on the short term as well. And this is the bigger picture of Bitcoin. Just like if you remove everything from the chart, you can notice this is a part where it confluences, we had a support around this area, those wicks along this side. So, and we're above this wick. So, if I now structure them, you notice the white line is the bottom of those wicks. So this is a very crucial line, 29,015 at the moment. And this whole orange box is a point of interest because the bottom of it will act as a support, as a resistance at the moment, because it coincides with this wick here. It starts, this is the whole structure, and this wick around here. So this is the range where the next upside potential we have like points of interest from resistances around here to the top of the orange box at the resistances around this area where it acted as a support here, and a bunch of supports around this area as well, and supported this wick. And that's the thing behind the orange box. So white line, orange box, 200-day moving average. And if we jump to the lower time frame and to see exactly what is happening, so that's the 200. So the 200 is at 25,000, around 300, and that would be the 0.5 Fibonacci retracement. So worst case scenario, we are allowed to go back to this, but we're not allowed to close below this one, this green line here on this area. So yeah, so if we broke this to the downside, the first target would be 0.1 because we had a support around this area and a support around this area. Second target would be 0.8. We had a reaction on this candle wick. So 26,655, next 26,218. Those are the two points of interest. Then we go down to 25,711, the golden pocket. Okay, so this one. Worst case, that would be 25,303. So those are the targets to the downside. So this is very important because this is the 200 weekly moving average. And at any cost, we need to stay above it. We stayed above it, and we stayed above all of this and above this broadening wedge, and it supported us. As we can see now, it is doing a good job of supporting us, which is very normal after a very bullish move to the upside. It's very normal to be supported by this. So, or to trade sideways, just like eating a very heavy meal and digesting at the moment. So moving sideways is always a good sign after that. That is causing us to create this bull pattern, pennant, or a bull flag. So that has a higher potential of breaking to the upside, as we discussed earlier as well. So those levels are to the downside very important. And if we and to the upside, we have resistances around as we said, this orange box, the bottom side of this, $28.99, $28,000, 100, and this white line, as we discussed earlier as well, 29,015. Okay, so this box is all the way up to 32,890, and as I said before, the next level to look up to in case we continued, and hopefully we would, because breaking out of this is an interesting scenario, is going up to the upside. That would be between 28,100 and 32,000. So if we want to go and take the let's go and take the trend-based Fibonacci extension and take it from the local low. Okay, let me do this exactly on a magnet. So local low to high. Oh no, wait, that didn't take. Okay, so now local low to local high, and then go back to my local wick around this area. So this is extending my Fibonacci to the upside, so that I would want to know. And as you see, well, like my targets, the potential targets, as you can see, I mean, yeah, it doesn't get any more spicier than this. So this would be exactly. So this bottom of the orange box is is exactly at this area, at the 0.382. Okay, that would be the bottom of our orange box. Guess what? The white line is at 0.618 Fibonacci, and the top of the box, yeah, at the 1.6 level. So they align by our Fibonacci perfectly. So those are the extended levels of the Fibonacci, and usually the Fibonacci is a tool where, yeah, that's algorithm and it's fractions numbers. Like we react to those numbers, life reacts to those numbers, deep dive into the you know the tool itself and the concept and the numbers and the mathematical calculations behind it. You'll be fascinated. But yeah, I mean, as long as my targets align with the Fibonacci levels, that are the numbers that I am expecting to react to, or the levels or targets to the upside. So to keep things short and sweet, if we have definitely, if we are supported by this Bollinger Band to the upside, and this is on the 4 hourly, so I would say, yeah, push to the upside, reaction around this area. If that is crossed, we have a reaction around this area. We might be doing something like this. As soon as we break this, expect a reaction to this area, or if that rejected us, we expect a reaction at the Bollinger Band top now, which is acting as a support. So as long as we're still above it, then those are the two targets, two near targets from 0.236 short term up to 0.5, 0.6. If we break that 29,000, then I would gladly be very much excited to yeah, to the top of the band at the 32,900. And who would have thought of discussing 32,900 1 month ago? Like literally 1 month ago. So these are the good news, like because we're still being supported, but I have some some bearish news as well. Not bearish, but something to look for. Remember, like, let me take this out of the way here. Remember we discussed the RSIs, right? And the divergences of the RSIs. So if you notice here, let's put them into action, right? Let's apply them. We discussed them earlier so that we can spot them on the market. So or in our chart. So this was a local top around here, right? On the price action, and this was the RSI top. So from this top to this top, that's a lower high, right? Like high, lower high. But on the chart we were having like a high and a higher high. So this move to the downside is expected due to a bearish divergence on the RSI. And again, I'll link the videos about the RSI in the top corner so that they're very important to check. So this is a bearish divergence, so it has a potential to play or to have a price decrease, and the price decreased exactly and was supported by the top of the Bollinger Band. But if this doesn't support us, this is not good on the short term. Of course, this is on the 4 hourly. So a retracement to the downside to the levels we mentioned earlier is not out of out of textbook. This would be a perfect bearish divergence and then rejection towards the 0.5 to the lower levels. But if this supports us and Bitcoin had a pulse to the upside, another pulse to the upside, then this would flip and create, a higher RSI level than the one before, and the divergence would be negated. So that is to look for. And what will help us to do so? Let's take the stochastic RSI and witness this. on the stochastic, because yeah, we take knowledge or info from many indicators and build our strategies accordingly. So that what is the stochastic telling us? The stochastic RSI is, if you notice, the green line is at the bottom, red line on top. So but it had this flip. Let me move it to the full screen so that you can see. So this is the bottom of the green line. So we want this started to take a turn, but we're waiting on the red line to have this flip, and then we want the green above the red. Okay, just like this area around here. So I'm gonna circle it here, like this area around here, and like this area around here. So if you want to go back to the charts and look those areas, so let's remove them so that we can look. So this area around here, right, was this area around here, right? Let me draw a straight line here. So yeah, this area around here was this area around here. So as soon as the green line flipped the red line on the stochastic from downside all the way to the upside, we had this impulsive move to the upside, right? On the other occasion, another flip here, green to red, below the 30 level. Yeah, this is on the 20 level actually. So yeah, this is oversold level. So below it, a flip green to red, this so but one potential as well. We had it around this area. So you notice we had a bullish flip to the upside, and now we're waiting for this green to go up and red to go down, cross it and flip green to red, and this would be another catalyst of us seeing this price action break even higher in those areas at those levels. So yeah, bearish divergence on the RSI. Stochastic is bullish, or still not yet. We don't have confirmation yet, but it's on the verge of confirming to bullish. That would give us momentum if that flip to be bullish again and have this momentum of pushing. If not, then this will go a little bit deeper. We'll lose support on this, and then we retest the lower Fibonacci down to 0.5. The most important thing is we close this week above the 0.5, which is at 25,300 at the moment. This is the most important level to maintain before the day ends and the week ends. So let's keep an eye on this. This is a very kind of very important tweet. Let's say very important tweet. Even if we went down to 25,300 and closed above it, it's very normal after such a pump to have a retest to lower levels, so I wouldn't panic, but keep an eye. Don't over leverage and don't over long, because now we have this bearish divergence and a retest potential to confirm our levels. The ones that we pushed up, we want to solidify and confirm, just like we did here on time frames, like come back, retest, make sure they support us, come back, retest, make sure that they support us. Okay, so we want to solidify our moves by retesting them and confirming a support so that we can continue clearly to the upside. That is everything for today. Keep an eye open on weekend and how the markets would open up, Monday, and based on that we can decide how the next week would go for us in the crypto environment. Stay safe, trade carefully, and see you tomorrow. Peace out.